Thanks, Karens. Okay, so I'm in Redbox right now. I've got 10,000 shares of Redbox. I've put a range stop order in place, 10 cents before I go, 10 cents below where I got in for the bottom stop, and a take profit at 20 cents higher. So basically, what happened, if I look at the 5-minute here, so you can see it on zoom out. So all this what I looked at, this is a double bottom. As we got up here at 640, that's where I entered. So I entered here for 640. I've set my stop here at 630, which is kind of the low up here. And I've got a take profit at 660. So I'm in for 10,000 shares. I'm 400 up at the moment. But we'll see. It's a 2-to-1 stop loss. I'm expecting a little bit of resistance at the $0.50 level, but I'm just going to give it its room. I've had a good day so far, so I'm risking $1,000. Essentially, it's well, I'm risking $900 if it reverses on me, because I've got 10,000 shares and I'm risking 9 cents, which is $900. But I'm looking to make $2,000. So, good evening, Kieran. I'm looking to make another $2,000. So we're already 6,300 on the day. We're having a really good end to this week, a really good start to the month, a really good Friday. It's setting us up for the rest of the month, which is good. So we're looking at I mean, we've got 600 right now, 700 on this unrealized right now, but I've got my take profit. I get to 655. What I'll probably do is move my stop up, add another 5,000. Really just this, let's say on the 5-minute double bottom. So that's what we're looking for, and we could potentially get a lot more on this. I'm actually going to add another 5,000 shares. I'm going to move my stop up to break even. Looking for 660 is my goal. I'm now no longer. Well, on this particular one, I entered at 639, and then I set a range stop. So I've got a stop loss and a take profit. I've got my stop. I have my stop loss set at 630, so it's 9 cents below where I started, and I have my take profit at 660. I've given my profit back. How'd you make that out? I'm $637, $6,370 up on the day. Where have I given my profit back? I don't understand where you're going with that, Traceman. You make no sense. But I've got a take profit here at 660, so I'm now 15,000 shares in this trade. because that's where I'm expecting this this to go. I can easily get out for 850, but I'm expecting this to get up to at least 660. Have I what? You're asking me if I've given my profit back. I honestly don't know what you're talking about. I was up 1,500 on today. I was up 1,500. I'm now up. Ah, right. You can't see it. That's my fault. Just a second. That better? So I got stopped out there. No, I didn't. I've still got 5,000 in. Got stopped out for 10,000 on a break even. I was looking for, like I say, it went up to 655, and we got we didn't quite make our goal. So I'm not too worried about that. Still think this is going to come good. So if this starts to move back up, what do we get stopped out at? We just got stopped out at 41. Don't mind re-entering for this one. It does start to make a move back up. Don't mind re-entering. The reason I'm looking at the 5 minute is this double bottom, W shape, if you will, and to break upwards. And I was looking for 660 as my target. Now it's pulled back some, but I still think we can get to that 660 target. So if we get back up to break over 640, I'll re-enter. $630 was my initial stop, so go figure. And don't mind setting those range stops. At least you know exactly what you risk and what you stand to gain. Oh, happy Friday, guys. Cheers. Well, I'm not asking you to give me money to trade for you. All I'm saying is I can teach you how to trade. It's up to you. Don't put money into the markets you can't afford to lose. I sell that to everybody, tradesman, as you know. Trading is risky at the end of the day. It can be an emotional game. I'd still be in this for 10,000 shares or 15,000 shares if I hadn't moved my stop up to break even. Which is why if we get to if we break 641, I'll buy the shares back. Let's look at it on the 1 minute. Let's see what the action is. See, that's the problem there, Traceman, is the gambling mentality. You need to get away from that. as long as you're going to gamble, the market will treat you like a casino and take your money away. You need to be disciplined. You need to treat it like a job. You wouldn't gamble with your boss's money. You know, you do what the boss tells you. So if you okay, I'm just gonna give this. Just gonna buy back in for the 10,000 shares. I'm in for 15,000 shares now, and this may or may not go against me, but I'm going to set my stop loss here at 635. Set a range stop. Slightly low, slightly higher on the range, but I'm still looking for that 660. So there's my stop set, so 635, so I'm risking 15,000 shares, granted, but I'm risking just over 8 cents on this. And if it goes against me, you know, it's a little over $1,000. But I've built up such a cushion on the day already that I can afford to be a little bit relaxed with this particular trade. I'm still expecting this to hit 660. If we get 660 with 15,000 shares, where's my calculator? I've had too many gin and tonics already. Yeah, so we're looking for 2,500 here. We're risking about 1,100 for to gain 2,500, so it's about right. Now this time I'm not going to move my bottom stop because I would still be in this, and I would not have lost that first $300. I'm just, I'm in a good mood today. I'm in a really good mood. So we left the earlier stream. We'd made the 2,000 on AMLX, AMLX. We made that in the early stream. We lost on TNXP $500. That was the first trade we took. So we were 1,500 up when I took a walk. I actually did a quick summary video for TikTok. I'll be doing a full summary video for everything later on YouTube. So we went to what? I came back and I saw GameStop moving, so I jumped onto GameStop. The thing is with GameStop is that it's quite volatile. It's a much higher price stock, but it's quite volatile as well. So I was able to get a little over $2,000 with that, which is good, of course. And then HCP was moving, and HCP had sold off heavily. It really had sold off. Pre-market, it basically vomited in pre-market, and it was starting to try and do a reversal. So I looked for an opportunity. I actually called it out in the Discord as well. I looked for an opportunity to jump on the bounce, on the reversal, on the move back up. And we managed to get a nice whole dollar move almost. So I called. I said, look for the break at 640. We'll get to no, sorry. Look for the break of $4. We'll get to $5 on 34 to 35, whatever it was. It was going to be a whole dollar move, and I managed to get that for 2,500 shares. So almost, not quite, but almost a full dollar move. I didn't always reach. That's the point. So the first point, you don't day trade with a small account. It's simple. If you've only got 200 days to invest, 200 a day to invest. If you don't have 200 a day, what you do is you save up. 200 a day. That's across a working week. That's $1,000 a week. At the end of the month, you've got $4,000. So if you don't, you just save up. You don't. You wait till you've got at least $5,000, and then you can start day trading. And even then, you're not risking everything. You're looking to, you're risking maybe $30 to make 60, or risking $50 to make 100. You're not risking everything. You start small and scale up, and what you get is these small incremental gains that. It doesn't seem like a lot on the day, but they add up. Let's just think about it. Let's put it into context. If you can make $100 a day, that's $500 a week. That works out at $2,000 a month. Okay, so that's just $100 a day. Now, you do that for a whole month, you've got an additional $2,000 of equity in your account. And if you've got an account, if you're on a margin account that's giving you, let's say, a 4x or 4-to-1 leverage margin, so that additional, at the end of the month, that additional $2,000 that you've got in there is an additional $8,000 worth of buying power. So that means that you're no longer having to scrimp and save to do kind of $20, $30 a trade, $100 a day. You're able to do $100 a trade, maybe $400 a day. The compounding effect, it's absolutely huge, but you have to be disciplined enough and patient enough to give it room to grow. And that's what I had to do to start off with. Granted, I put a lot of money in the markets to start off with and lost it. But just to put it into context, the small account challenge I did in February, where I took a $5,000 account and finished after 19 trading days with a $78,000 equity position, it's a bit of a false flag, because I had money in reserves. So what you're saying there, Reach, is that I've got big capital to put in. I have money in reserves. So if I lost that initial 5,000 I put into the account, do you know what? It's not a big deal. I can start trading again tomorrow. So I could afford, at that stage, I could afford to be aggressive with my trades. I could put all of my equity into a trade and risk half of my equity on a trade to double up. That's not recommended. That's not how you do a small account. That's not how you trade a small account. Absolutely not. Anybody that does these small account challenges, they're doing it from a position of power. If you start with if all you've got is $5,000 in your account, then maximum that you're going to be risking is about $50 on any trade, 1%. So you don't risk more than, maybe if it's a good setup, you might risk 2%. But you don't be risking more than 5%, more than 1% on any given trade from your equity. That's what my recommendation anyway. And yes, if you've got a larger account, you can make larger gains. Money makes money. It's economies of scale. Of course, it doesn't work the larger you go. You can't trade. There we go. We're probably going to get stopped out here. And sometimes you're not right all the time, so I might not be right on this one. I've seen the pattern. I've seen the the double bottom pattern, the W pattern on this red box to move up. I'm expecting this to go to 660. I might not have given it enough room. If that's the case, then fine. I'll get stopped out and leave it. That's fine. I'm not saying that you put 5k into every trade. What I'm saying is that you don't risk more than 1% of your equity position. So if you've got a 5k account reach and you've got a broker that's giving you leverage, you might have 20, let's say 4x leverage, it's giving you $20,000 worth of buying power. What you're not going to be doing is buying $20,000 worth of stock. So you don't you're not going all in with your whole hand and then risking let's say 10%. Or you could go, if you went all in and with $20,000 of stock and you risked 1% of the position, you'd effectively be risking 200, which is not too bad. You know, you could be risking 200 to, as long as you potentially can gain 400, then that's okay. But you need to be able to lose that 200 that you risk on that trade. So on any given trade, I would say you're taking a share size with a $5,000 account. You've got $20,000 worth of buying power, but on the trade itself. So if you take 1,000 shares, for example, and you've got a $5,000 account, you're risking 50 cents. So you don't want to be risking more than 5 cents on the trade with 1,000 shares. If you're taking 500 shares, you might risk 10 cents. That's 50 cents. That's 1% of your equity on any given trade. So that's what I'm saying, Reach. You scale your position accordingly so that you're not risking more than 1% of your overall equity. Now, if you were taking, let's say, 1,000 shares of a $5 stock, that's $5,000 it's going to cost you to take 1,000 shares, but you're only risking 5 cents on the move. So you're risking, as I was saying, that 1% of your equity. Because you've got the leverage, in theory, you could still risk that 5 cents on the move with a higher price stock. You take a 1,000 shares of a higher price stock. Let's say you take 1,000 shares of a $10 stock. That's $10,000 into the position. So you're now risking. Oh, here we go. We're moving up. We're moving up. So you're now risking. You're still only risking that 5 cents on the dollar. So you're still only risking 1% of your equity position, but it's costing you more to actually enter that position. You're putting more money in to actually risk that and make the gains. So you're not. And if it's a $20 position, you take a 20. In theory, you not get 20,000 shares of. You'll not get 1,000 shares of a $20 stock for 5,000 because you've got to have a little bit left over anyway. But what I'm saying is that as you move up, you can potentially, if you're taking let's say a $10 stock and you're risking 5 cents on the move, the likelihood of a $10 stock moving 10 cents is a lot more than a $5 stock moving 10 cents. So that's what I'm saying, Rich, is that if you're risking 5 cents, you want to be making at least 10 cents. And if you make 20 cents, great. If you make 25 cents, even better. You get a 5-to-1 risk reward. But you set your stops and you work this out before you actually enter the position. You put your stops in place. As soon as you've entered your position, you can either have it as you enter and have a stop automatically done, or you just look to manage your risk accordingly. Now that's using kind of a 2-to-1 risk versus reward, which is seen as the golden ratio. But by all means, do a 3-to-1, do a 1-to-1 if you want to, and have great trade accuracy. If your trade selection is on point, and you've got you get 2 winners for every loser, then if you're 1-to-1 risk reward ratio, you're going to be profitable. Most people don't have that level of accuracy. I have a really good accuracy rate. At this moment in time, my accuracy across the year is 3-to-1. My accuracy last month was still 2-to-1, even though I lost money. So, it's how much you're prepared to risk per trade, not on your account, is what I'm saying. So across the course of a day, you might have a max loss. On the day, you might say, okay, well, 5% of my equity is how much I'm prepared to, and then I'm just gonna, if I lose 5%, or if I lose 10% on the day, I would say as a beginner trader with a $5,000 account, you lose 10%, it's $500. You lose $500, you shut the thing down, that's your max loss for the day, no more trading. Come back tomorrow, you might have better luck. That's what I would say. But per trade, you don't risk more than 1%. How long have I been trading? I've been swing trading for a lot longer than I've been day trading, but I've been day trading for, right now, a little over 2 years. So I had a high-paying job, had a high-paying career job. I was in the C-suite, if you will, with a software company, regional vice president for Europe, Middle East, and Africa. The pandemic came along. I lost that position. I got a settlement figure, a severance check, but I lost that position. And as a result, that was a big flush. As a result, I was caught in a funny situation where I had a lot of time on my hands. I had no 9-to-5, and nobody was hiring because of the pandemic. So I was able to invest myself into the markets, into the finance markets at the time. And I lost a lot of money to start off with. I'm like nobody else, like everybody that jumps in without a clue of what they're doing. I lost money. And it took me, quite a while, because I really submersed myself in it and invested myself in it. I was able to get profitable and stay profitable, and I'm consistently profitable. And my, my broker statements, my trading journal, all support that. I started streaming in February. I did a small account challenge in February, more for the clout than anything else. And people started asking me to, teach them how I do it. That's fine. I have no problem with that, but there's only one of me and there's lots of you. So I put a course together for people to actually learn. Now, I don't charge a lot. I know there's gurus out there that are doing a similar kind of thing, and they're literally charging thousands. I think Warrior Trading it's like $5,000 for his course or something. There's another that's Clay Trader. It's like $3,000. So I charge $150 a month. The reason that I charge $150 a month is I value my time, and if you don't value my time, I don't want to teach you. Why would I teach somebody that doesn't value the time that I put in? So, I need you to have skin in the game. If you pay for something, you're going to pay attention and you're going to utilize that. If you don't pay for it, it's for free. It's a waste of time. You're going to treat it with the disrespect. Yes, I use Benzinga. I swear by Benzinga Paladinaris. Benzinga is my what's the word I'm looking for? My golden compass. What you're seeing in the middle of the screen in front of you is just two Benzinga scanners there. I've got the movers on the day, and I've got the movers, actually it's the same one. Really should change that. But what you're seeing there is the movers on the day. I wouldn't say Holy Grail. Holy Grail is that that seven figure net gain on the year. That's my Holy Grail. a golden compass that's going to get me there. Benzinga gives me all those directions, helps me select stocks, tells me what stocks are moving, how much they're moving, why they're moving, what volume they're moving on, etc., etc. So that's why I use Benzinga. Everything's right there at my fingertips at any particular time. Look, that's fine. If you're paying for a group already, you know, work with them and practice in a simulator. That's fine. But anybody says give it away for free, why would I? I mean, come on, if you've not got skin in the game. Secondly, if you can't afford 150 bucks a month, my question to you is, can you afford to day trade? The answer is no. If you can't afford 150 bucks a month to day trade, to learn how to day trade, you're not going to be able to afford to day trade. Simple. So the course is not aimed at you. You know, by all means, join my live. You can learn how to trade just by sticking around and watching me trade. Right now I've got a I've got a range stop order. It's right at the bottom of this range. I'm waiting for this to move up to 660 or stop me out at 635. It's currently 638. So, you know, either which way, I'm giving this enough room to. I'm not even going to touch this now until it hits one of these range bookends. Absolutely, Reach. It's not £150, it's $150, which is about £120. But you get all of the content. It's all recorded. You've got recorded. First and foremost, it's not just recorded lectures and the exams and the content. You get the reading material as well. You've got a whole library of reading material, best-selling reading material, that as part of the course, which is that in itself is worth more than $150, but that's besides the point. You get the reading material, you get over 20 hours of recording lectures on day trading, you get a separate swing trading course as a bonus, you're getting access to a private Discord where I will mentor you. If you're using TraderView, I can actually review your trades with you and give you pointers and direction, I engage with you directly, so you're getting personal interaction. It's not just one of these Udemy courses that are worth absolutely nothing. Trust me, I've taken a couple of those, I pay for a couple of those, and they're not worth the paper. But that being said, there's probably people in this stream right now that will back me up, that have taken the course, that will say, look, it's worth every penny, you know. But it's $120, $119 plus tax. So let's say it's $146. Call it, round it up, $150 per month. If you get through the entire course in that first month, cancel. In fact, if after the first 7 days, first 2 weeks, if you're not happy with the course, let me know. Ask for your money back. I'll refund it. No problem. But if you take the course, and I recommend taking it for 3 months. Now you can take the 3-month option, you get a discount, or you can take 3 consecutive months. The reason I say that is to assimilate all the information. You've got part of the course gives you a trade plan, which is a 3-month trade plan as well, and it allows you to do some practicing. It allows you to trade and, you know, practice the strategies and the methodologies in a simulator before you put money on the line, so that you're not risking anything, so that you can prove to yourself that actually I get it, I can implement this and not get carried away emotionally. Okay? Do I pay for TradingView and Benzinga? I don't pay for TradingView because TradingView is free. I only chart one at a time with TradingView, and TradingView is great. It's worth it's only cheap subscription. If you want to use TradingView, by all means use TradingView. It's not expensive. TradingView is really, really good, in my own personal opinion, and is worth the money. But it's a freemium product, and the free platform is excellent. Really good for deep dive analysis from a charting perspective. It's one of the best charting tools out there, TradingView. So I would recommend anybody go and get TradingView, even paper trade for free with TradingView. You can learn how to chart, you can learn how to do the technical analysis, you can learn how to read the charts, find areas of support, resistance, pattern recognition, all of that for free on TradingView. I recommend it wholeheartedly. Benzinga, you can try it for free for 14 days. Check the link in the bio. If you do, in the link tree. If you don't like it, don't subscribe to it. Simple. If you do like it and you want to subscribe to it, use the discount link in the link tree, and you'll get at least 35% off, depending on what time of if there's any particular promotions going. There might be more, but there's at least 35% discount on that on the Benzinga. And I pay for Benzinga. I take the essentials package, which the list price is about 177 a month, or you do get about 30% off if you go for an annual subscription or whatever. And whatever you go for, monthly, quarterly, or annual, as I say, I can get you at least 35% off by using the discount code in the description. Yeah, absolutely, London. I mean, you don't want to pay any if you're not using the course. You take the course, that's it. That's fine. You know, if you want to continue, I mean, there are some people they've gone through the course, but they're actually engaging me directly and getting my mentorship. They're actually asking me to comment on the trades. They're using TraderView, which is what I use for journaling. They've nominated me as a mentor, so I can actually access their trade record and comment on their trades and give them constructive feedback as to, look, your entry here was either too early, too late, wrong in how many ways, or whatever. You held on to a loser too long, you put your winner too early. I can give all of this kind of feedback on individual trades as well. So that's why some people are just holding on and continuing to subscribe in, because they want that mentorship and they want that direct engagement. So, you know, that's fine. You know, if you can take what the content gives you and learn for yourself with the recorded content, that's fine. If you're going to simulate that in a fortnight, fine, do it in a fortnight. If you're used to binge watching, you know, box sets on Netflix over a weekend, then it probably suit you down to a T. You probably cover it off over a weekend. There's 20 hours of recorded lecture material. So, you know, it's up to you. You know, the chart you're seeing right now is in DAS Trader. This is my trading platform, because what you get is when I've traded, you get little arrows showing where I've entered and where I've exited. So I'll show you. My initial entry was here, little green arrow, and I added to my position up here. I took 10,000 shares here. I added 5,000 up there. I had a range order, and the range order was originally 630 to 660. And it was my entry here was 639. As it came back down, it went up to 650. What's the high of this candle? 656. Didn't quite get to 660. It came back down, and I'd already moved my. When I added to my position up, I had an additional 5,000, so 15,000 shares on this one. When I added here, I moved my stop up to essentially break even, if you will. So when it came back down, it stopped me out, and I then, when it started to move back up, I added the 10,000. It stopped me down. It stopped me out there, and I added the shares back in when it started to move back up. So it just stopped me out here. So I'm no longer in the position. So we're still 4,400 on the day. 4,500 profit on the day is good. So now, just because my OCD is about to kick in, I now want to earn. I want to make $530 back, so I can finish on 5K. Just OCD, you know. Evening, Matt. Good to see you again. the reason I got in this trade in the first place, so you're seeing the one, I'm showing you the 1 minute chart, but I'm looking at multiple time frames at any one time. So if I look at the 5 minute chart, I saw this move here, and it looked to me very much like a double bottom, and I wasn't far wrong. So I'm looking at, okay, well, where's the bottom? What's the range on this, and when do I get in? So I looked at the middle of the W, if you will, and that's when I entered here. So I entered here, and I thought, okay, well, what I'll do when I enter is I'll set my stop. Effectively, well, it wasn't quite 10 cents, it was 9 cents, so it was at 6.39. But I wanted this move up. The length or the depth of this move here from the middle of the W to the bottom of the W was about 30. It's about 30, a little over 30 cents. So I was saying, okay, well, if I get it, then I'm looking for 30 cents for a move. So 39 plus 30 is 70. Just to be safe, I'll take 60. So I set my stop at 60. The double bottom, so I set my stop at 60, and we got up to 56. So I wasn't wrong. I could have taken profit up there, but I was too busy gassing and doing other things. So that's why I set the range stop order and let it work. And you know, it is what it is. OCDs are not good. No, they get you into a lot of trouble. Absolutely. Well, they get me into a lot of trouble, at least, anyway. What's worse, with when you've got OCD, if anyone in the chat's got OCD, back me up on this, because what's worse is when you go round to a friend's house or a family member's house and there's something out of place. And it's not out of place, it's just, they might have an ornament that's facing the wrong way. And it's not facing the wrong way, it's just your OCD's telling you it's facing the wrong way. So you go over there, it starts really annoying you, and you can't concentrate on conversations, because all you can see is this little trinket on the mantelpiece facing the wrong way. So when you think nobody's looking, you go over it and you turn it around and make it face the right way. Just because it's really annoying and it distracts you, you know. So and then somebody looks at it, somebody sees you moving it. Well, what are you doing that for? And then you've got to explain yourself. Why are you changing things around in somebody else's house? It's not even yours, you know. That's really embarrassing when you've got OCD. Anyway, to those that weren't here at the start of the stream, happy Friday. Cheers. Have a good weekend, guys. I've started early. I'm on the gin and tonic, so I've started early. Well, it's not early. It's 8 p.m. I mean, that's gin time, isn't it? Come on, guys. Let me know let me know where you are, what time it is, and what time you would normally say is gin time. Right. Let's have a look. Oh, that's a 5 minute. I want a 1 minute on that chart. See how quickly it's moving, you see? I don't like that. I know it's moving up. I just don't like the setup. It needs to pull back. If we get the cup, this potentially could be a cup. If we've got a handle, then maybe I'd be interested. But I don't like that setup. Happy hours. Every hour is a happy hour if you've got the right frame of mind. Problem is, most of us don't. And we're more happy when we're miserable than we are when we're happy. In fact, when we're happy, we start worrying about what's going to ruin the happiness, so which makes us miserable, which makes us happy. Red box selling off there. Yeah, I probably should have taken the profit up at the top, but hey, look. we've not even racked up that much commissions today. It's less than $200 in commissions so far. Well, that's good. Houston American's still moving up. Oh, that was a nice little move, that. So we've got quite a lot of energy stocks moving at the moment. So we've got Houston American, we've got Inservco, we've got quite a few energy stocks. Not a huge amount that's moving a lot, but they are moving. I'm not in a trade right now, Crumpet. And why is Crumpet a conspiracy? I like Crumpets. Don't tell me I'm part of that conspiracy. I didn't know. I like Crumpets as well. Nice bit of Irish butter, salted butter. Oh, don't get me started. Take a look at this. So let me pull this across for you. So this here is the global market as it stands. And as you can see, there's a lot of red. It's quite substantial. Here's your map. Microsoft's down, Apple's down, Google's down, Amazon's down. They're all down because the market's down. You've got, it's not huge. It's not 100% red like it was a couple of weeks ago. We've still got some of, the energy sector's green. We've got a few in the health sector are green. We've got utilities that some are green, some are red. Biotech, most of it is green. So it's not all doom and gloom, but there's a hell of a lot of red. This is the finance maps. So yeah, I totally agree with you. There's a lot of red on the markets at the moment. Let me get back to the chat. There we go. What's the bottom for Tesla shares? It's a good question. Let's have a quick look at where Tesla is right now. I wouldn't want to say what the bottom is because the likelihood is that I'll tell you a bottom and Tesla will go and do a stock split, and then maybe a 4-to-1 stock split, and then it'll be a quarter of the price for a share that what I said, and they'll make me into a liar. But let's have a quick look at Tesla. There's Tesla on a 1 minute. Let's look at it on the 15-minute. Gives a better down in line with the rest of the market. I wouldn't worry too much about Tesla or Amazon or Microsoft or Micron or any of these big AMD, that kind of thing. I wouldn't worry too much about these guys selling off, right? Because the market's selling off. They're all selling. You can't tell me that AMD is having a bad day at the same time as Amazon is having a bad day. And that it's not interlinked. The reason it's interlinked is because the wider market is selling. So they are following the market. So when the market is in a downtrend, as it is right now, the S&P 500 will invariably sell off. If you were invested in these S&P 500 companies, you buy more. It's the difference between day trading and value investing. If you are day trading, you're looking for quick fire gains, whether it's to the downside or the upside. You're looking for intraday gains. You're looking to get in and get out within the day for a profit. If you value investing, you don't really care about the price. You just, okay, I've got some spare cash, I'm going to put it into whatever my portfolio is. In the long term, it always comes good. If you look at the S&P 500 over the last 10, 15, 20, 100 years, it only goes in one direction, and that's up. So yes, there's peaks and troughs along the way, but the long term is that it goes up, and it goes up on average between 8 and 12% a year. So historically, that's what you can expect from the market, and that's what you will get. If you put your money into the market and it compounds, it's going to compound at somewhere between 8 and 12% annually. That's what's going to happen. So you put your money into an ETF like the SPY, that follows the S&P 500, then you're going to gain between 8 and 12% a year in the long run. Someday, when we're in a bear market, you might get years where you lose money, but in the long term, you're going to gain between 8 and 12%. The likes of Tesla has been outperforming the S&P 500 over the last 4 or 5 years to a huge amount. In fact, what was the price of, we've got Tesla right here. We should be able to, I'll put it up on TradingView. I can go back further on TradingView. Let me just pull up on TradingView Tesla. And let's look at the daily over the last. Okay. So we only have to go back as just a moment. We only have to go back as far as less than 10 years with Tesla. So April 2013, it was trading at $7.60. It's now trading at $700. So put that into context. In less than 10 years, it's done 100x. So ask yourself a question. Should you worry about your long-term investments if you're dollar cost averaging and you're adding to your position on the move up? If it's an S&P 500 stock, no, you shouldn't. I mean, the top end of Tesla was over $1,200, and yet you could buy it for $70 back in 2013, April 2013. You buy it for $7. I mean, come on. And there's a lot like that. Let's look at that. Let me take a quick look at Amazon. So Amazon, in just 7 years ago, 2015, you could buy Amazon stock for $300. It's now $2,500. See what I mean? It's phenomenal, the gains, and the peak was over 3,700. So the peak of Amazon stock was over 3,700. It will get back over. Well, actually, it will take a long time before it gets back over to 3,700 because they're going to do a stock split on Monday, which just basically means that there's going to be more tokens for the same value in the market. It's not altering the market cap at all. It just means if you've got one stock on today, you'll have 20 on Monday. That's how that works. Like going to the bank with, or going to the bar, and you've got a 20 quid note, and they give you what, 21s. You've still got the same value. You've just got more tokens representing that same value. That's the only difference. That's what's happening on Monday with Amazon. Will it get back over $2,000, $3,000 per share? Probably, but it'll take a while to do that, given that they're actually, each share is going to be worth 20 times less. I'm glad you're green, Alistair. So am I. Well, you could buy Bitcoin for $4. 15 years ago or something. Come on. That's the whole point. It's going to be more accessible to you know, Joe Sixpack on the street. So it will add liquidity to what is considered right now price prohibitive. It's Amazon right now is just too expensive for most traders, most investors. They just won't buy it unless you've got a broker that gives you the you know, fractional shares. Then most investors will shy away from the big stocks like, you know, Berkshire or even Amazon. But with the stock split, it's going to be what, $120 a share. That's much more affordable for your average investor. Hey Kyle, how's Texas today? Go back to the 1 minute. I want to see. I want that extra 500 quid. I'm getting antsy here. Bolt. Oh, no volume. Houston American had volume and it's moving. Go on, I'm just going to gamble. I'm looking for an entry. I'm going to gamble with this. I want $500. A little bit of a pullback here, so a white for the entry. I'll next move up to 505, and then I'll risk 5 cents. Risk $250 to make 500. I want that 500. I just want to finish over 5 grand on the day. I was up 6 grand, and I've just given some back, so you'll have to forgive me. Of course, the gin and tonic's talking too. Absolutely, Alistair. Do as I say, not as I do. When I say gamble, I'm not gambling. I'm just looking for a safe entry on Houston American. It's a top mover at the moment. Over the last hour, it's moved 10%. So I'm just looking for an opportunity to buy 5,000 shares, and just going to risk. There we go. I'm just going to risk. What did I get in? I'll risk 8 cents. If it drops below $5, I'm out. I want that 500. I'm watching this to make 500. Don't say that, Eds. You put the mockers on me. Yeah, Houston American Energy. It's one of the energy stocks. The energy sector's moving today, and Houston American is the top performer. And Servco right now is the second top performer. It's a slightly cheaper stock as well. So that's ENSV if you're wanting to get something half the price of Houston American. That's in Servco. There's actually a few good energy stocks. US Energy's moving up now as well. So ideally, I'd like to get 10 cents on this. So we're looking for 520. What's the high of day so far? 518. I'll take 518. Let's see if we can hit the high of day. I'm gonna get out. In fact, I'll set my stop here at $5 now whilst I'm here. risking 8 cents to make 12. Three to 2 ratio, but hey, look, what you're going to do? Risk reward, it's still better than 1 to 1. It's 3 to 2. It's only because I want that 500. That's all. If I was to analyze this trade, I probably would risk a little bit more to make a bit more because it's moving up. There we go. We threw a wick out at $5. There we go. Got stopped out. Ah, well, never mind. It's cost me 500. I'm now under four grand. So the UC, you know, the OCD is not going to kick in. If I'm under 4,000 as opposed to 4,600, it's not going to kick in as much. Well, the fact that nobody's now buying Russian oil means, or Russian gas means that everyone else's gas becomes more expensive. Houston American Energy. Yeah, well, you do like your swing trade in there, Kyle. But for whatever reason, you like to swing trade your you like to swing trade these low float stocks as well. I prefer, if I'm swing trading, I prefer something that's a little bit more reliable personally, but I'm not saying you're doing it wrong because I would never do that. It's all about personal preference. I know you like to swing trade some of these low float stocks. Yeah, no, that's why I put the stop in place. It's moving back up again. So we're getting a bit of a pullback off the top on the 2 minute. I got this little pullback here. That's why I entered for the break of new highs. It just actually happened to enter right at the top before it pulled back. So, you know, let's have a look. Let's see if we can still could potentially make 5k today. I need to make 1100. It's gas, isn't it? It's gas. When you're in a good mood, it's gas, isn't it? How much money can you lose at the death? How much money can you lose in the closing 30 minutes of the market? Let's see. Well, you know where to learn it. Kyle. Reach, I may well enter again, but I've got to get a nice entry. That's the whole point, is you don't enter just because you've got stopped out. You wait for the entry, you wait for the confirmation that it's actually going to go in the direction you expect it to go. Otherwise, you're just throwing good money after bad. So right now, if you were looking at let's look at this as a bull flag scenario. I've been looking at 503 for where it's just hit and the move up confirmation, but I want it on volume. Right now, I've just hit 503, but on low volume. So I don't want to do that. I want to see a bit of volume coming in. I want to see ideally 100,000 shares or more with Houston American on the move up with that. That's the confirmation I'm looking for. So that's on the 1 minute, which if you look at it on the 2 minute, you can see we didn't actually get faked out, which is why you look at multiples. So 503 is the high. Look at 504, ideally 505. It's probably where I may look at getting back in here at 505. But I want to see volume coming in. If I'm not getting volume, the breakout's not going to be reliable. So if the breakout's not reliable, I'm prone to be faked out. There we go. I'll take that. it 5 cents. Put the stop at $5. I put 10,000 shares in this time, and I want to see this move up. Breakouts come from buyers or sellers. Absolutely, it depends on which direction you're looking. Breakouts come from buyers on the upside, or they come from sellers on to the downside. I want to see this up around. Well, let's see where we're going with this. It's 300. God's sakes, bloody YouTube bots. Whole bunch of them coming in trying to sell me some kind of Tinder service. I'm like, do I look that desperate? Really? I know I'm divorced, but I mean, come on. $5.15 is what we're looking for. $5.16 ideally. But why not? Let's put a range order in here, and there's the order. If we get 5.16, it'll give me what I need. There we go. Hey! G&T tonight, Jack? Absolutely. And it's a lovely, it's Horton's gin. It's an Irish gin maker, and it's rhubarb and ginger is what I'm on at the minute. So it's lovely. Gin and tonic, rhubarb and ginger gin with elderflower tonic. It's lovely. So there we go. $5,000 profit on the day. That's my aspirational goal. There's something about $5,000 a day that I need to do. Well, I know what it is, but it's a psychological level for me. So I've done $5,000, and funnily enough, now it's starting to pull back. So thank you, Houston American Technology. $5,000 on the day, and it's still moving, but that's me done for the day. I'm not trading anymore. I'll carry on streaming until 9 p.m. my time, which is effectively going to be 4 p.m. East Coast. I'll be back in just 2 seconds. Okay, baby. You know what's good about this week as well is that, of course, we had Labor. It was a national holiday in the US on Monday, so we had Labor Day. There was no trading on Monday. But we had a good day on Tuesday, and we had a good day on Wednesday. We've had a good day on Thursday, and we've had an even better day today. So we did over 5,000 net on Monday. We did 2,500 net on Tuesday, and then on Wednesday 2,500 net, 3,500 net on yesterday, and today we just was my net P&L 4,500. So happy days. 4,300. So we're not just are we steadily increasing the gains, but we've got our mojo back. I'm feeling confident for June. It's been a fantastic day. I mean, I think the best I called a really good trade out in the Discord, HCP, and in the Discord I said, look, this is going to move at least a whole dollar based on the pattern breakout, and it broke out and it moved a little over a whole dollar. I only went in for 2,500 shares. More expensive stocks, kind of $34, $35. I got in for 30 for the break of 34 and rode it up to 35, and it was one of these easy trades, very, very easy trade, and we made $2,500 on that one as well. GameStop, well, GameStop's GameStop. It's been giving money to the Joe public for the last 2.5 years, so it could have been so much better if I hadn't if I took profits at the top of that red box play. I had my take profit. I put a range order in place and had my take profit at 660, and it went up to 656, and I just left it, and it came back down and hit my stop loss. So yeah, we lost money with red box. No, I'm looking for 5 figures this month. I've not had a 5-figure month. When was the last time I had a 5-figure month net? Let's have a look at the net rather than. I want to get over 100k. January. I've not had a 5-figure month since January net. I need to get back into that swing of things, if you will. I've got this aspirational goal of having a net 7-figure year, and to do that I need to be hitting six-figure months. So I need to be hitting over 100k a month, realistically speaking. And certainly now, where's my trader view details? I don't know why I'm asking you guys. You can't see my desktop. It's here. Here it is. I found it. Don't worry, guys. I found it. You don't have to look for it. So I'm already at annual highs. So I'm back at the highs of the year. So before today, here's my detailed. Let's bring this across. You can see this here. Total gain for the year 390,000. This doesn't include fees, charges. This is gross. This is not fees, commissions, charges not included in this. So that's where we are right now with this. Why can I not scroll on this? Okay, let me just see. So yeah, these are the statistics, and all right, let me get this. There we go. Now you can see it. So So largest gain this year, 67,000 in a single trade. Largest loss, 27,000. Both of those, funnily enough, happened live on stream. So there's no lying. I can't manipulate these numbers. You saw them. You saw these numbers happen as they happened. But 390,000 since the 1st of January is you know, it's not bad earnings. Gross numbers. It's a little over 300,000 after all the charges. If I look at my other piece at the moment, 308,000 before today. So I add today's on top of that, it'll be 312,000. So it's cost us up like 75 grand in charges, fees and commissions and things. We're looking at a 2-to-1 accuracy across the year so far. 67% winning trades, 33% losing trades. So my accuracy is really good. The big losses I took at the beginning of March, April, and May have this average losing trade higher than it really should be. The last 3 months, the first day of the month, I've had big losses. I've swung big on the first day of the month, and it's the wrong thing to do, because normally I would have taken profit. I've already sent the email across, but it's not been actioned yet. Sent that across earlier today, so that'll be taken out today. I've taken 25k off my account. That'll probably hit next week, Monday or Tuesday, when that hits the balance. But in terms of profit factor, 1.86. That's really, really good. So I'm happy enough with that. I'm a consistently profitable trader. As you can see here, win-loss ratio, basically 2-to-1. Here's my drawdown, cumulative P&L. Here's my drawdown. I had big drawdown in April. A big drawdown again. April, we recovered it. It took me a long time to recover in April, and then the last week was profit, and then we had the similar sort of thing. It took me all last month to recover it. Net wise, we didn't manage to recover. We still had a loss in May. Here's my cumulative numbers. So the height, we did get as much as 388, but now we're up at 390 plus the 5k today, so 395. So good. A good year so far. It's not. I think we could do better. If we had a better market, we definitely would do better. I know that for a fact. Just based on last year's performance, I didn't get the 7-figure gains that I wanted last year. So that was the aspirational goal for this year, was that I would be able to make 7 figures. But you know, needs must. Where's my... Would you leave my stream alone? Absolutely. No, a 6-figure month is 100k. Absolutely, Alistair. That's what I'm talking. I want a 6-figure month. I need some 6-figure months if I'm going to have a 7-figure year. It is possible, but it's looking increasingly difficult. That's the problem. But if we average out across the year, and let's say we get between 90 and 100k a month, then I can have a 7-figure year. If I'm having 40, 50k months on average, it's not going to happen. You know, there will be. I've had one 6-figure month this year, and we're now in month 6. So that means I have to have really, really good months going into the second half of the year. So if I have let's say I do 100k this year, do 100k this month, I'd probably need to still do 120k a month for the next 6. But either way, I've had a good day. It's been a great day. I've enjoyed my trading today, and I think that's, say what you like about swinging for the fences, or you know, the psychological element to trading. I think when you're enjoying it, you're more likely to be successful. I think it goes without saying. And I would say the last 2 weeks, I've been enjoying my trading a lot more. I went through a period, particularly in May. It was difficult trading period. It was difficult trading in May. Difficult trading conditions. But I just wasn't enjoying it as much as I had been previously. And I dare say a large part of that was because I was losing more money than I would normally do. But that being said, I think, which comes first? Are you losing because you're not enjoying it, or are you not enjoying it because you're losing? I'm not quite sure. You know, a nice little villa in Estepona, Alistair. I'll get myself a nice little villa in Estepona. We'll spend about a third of that number on that villa. And that's what I've been talking about, going on holiday, and I'm deliberately avoiding going to Spain, because if I go to Spain, I'm going to end up on the south coast where I used to live, and I'm going to start property hunting, and I'm going to see something I like, and I'm going to think, I've not hit that set. So the whole point is that I've got to have goals. I've got to set my goals, and I've got to set, you know, what I'm going to do if I hit that goal. And I don't want to do it until I hit that goal. It's not been hacked. It's just we've got a bot keeps trying to put these crappy messages in the chat. So I keep blocking them, and a different bot comes out and puts the same thing in. So yeah, that's my goal. I get a 7-figure year, and I can reward myself with a nice little villa. And of course, I'm not going to spend the money on the villa. I'll get a mortgage for it. Why would I spend my money where I can spend the bank's? But that's the goal, is that I can afford to buy that villa. That's the point. Yeah, to be fair, TikTok chat's very clean. You don't get the spam in the same vein as you do in the chat in YouTube. However, TikTok spam comes in comments on videos, and I've not been as prolific in posting videos over the last couple of weeks. Yeah, you're absolutely, Alistair. That's the whole point, is that if I was living in Spain, it just means I'm an hour further forward. So instead of me starting at 2:30, I'll be starting at 3:30, and you know, market opens. And doing it from the pool side. You know, that's the idea, is that I want to get somewhere that has good infrastructure in terms of connectivity, but is tropical enough that I'm not going to continue to suffer with my arthritis. So yeah, you get decent fiber in Telefonica in Spain, so you know, you can get decent fiber there. But even Portugal, you can get good fiber connectivity. Most of Europe, there's very few countries across Europe where you can't get good connectivity. Ireland is probably one of the worst. Funnily enough, Ireland is considered a technology hub for this is just, if I hadn't been drinking gin and tonic and I've been paying attention, I could have made a fortune on Houston American. Look at how much it's run. I got out there at 516. It's now 554. Could have made a fortune if I'd left that 10,000 shares in there. Look, 4 more. I'm not going to bother. Gin and tonic. Enjoy. Absolutely. Well, you know what I'm talking about, Alivet. The infrastructure outside of the Pale, outside of Dublin, the infrastructure is horrendous. You can go outside of Dublin, and there are places where the connectivity is akin to dial-up. It's terrible. You can't get a phone signal. You can't, you know, in the Midlands in particular is probably the worst. Horrible. One of the worst connectivities in Europe. It really is. You go to places like in the Nordics, you go to Finland or Sweden, and there's free Wi-Fi in the street. You're walking down the street and you've got free Wi-Fi, not for 4G, Wi-Fi. M50's a car park, Jack? I don't know. I've not been on the M50 for a long time. I've not had to traverse the M50 for a while. Do you know what? I'm gonna lock my montage because I'm getting itchy fingers. Thinking, okay, Houston American, and we've got 7 minutes to the close, and I'm thinking, you know, there's a nice little pullback there. I can as we move up, we can probably get another 20 cents on that. And no, I've just locked my montage. I can't trade anymore. Ireland is good, but outside of Dublin, in the greater Dublin area, Ireland's really good. Some areas of Cork, but outside of that, in the rural areas of Ireland, it's terrible. I look forward to some feedback there, Alistair. Give me an insight into what my future looks like. To be fair, really enjoyed trading today. In fact, I've actually enjoyed trading this week as a whole. It's not been easy. There's been some difficult moments, and we're still in a bear market, but we've had some good days, and today's probably been the best. I don't think we made as much as we did on Tuesday, but overall, I think today's been the best day for trading. I just feel like it was easier to trade today, and we were 6,000 up at one stage. The red box thing was just me trying to prove a point. So, you know, and I'm still taking that as a win, even though I lost $2,000 on it. I'm still taking that as a win. So let's look at where we are on the market. Now, the markets have been vomiting all day, really. Look at the NASDAQ. Let's look at it on the 15-minute. This is the NASDAQ. You've got a little bit of a double bottom there, so I would expect this to move up next week. Look at the... Hang on a minute. You'd think I've not even changed the chart there. So there's the NASDAQ. There's your S&P 500. There's your Dow Jones. There's your... That's a lot different to the rest. The Dow Jones is a little bit higher up on the screen, but it's exactly the same pattern. And the Russell Index, which is the small cap index, is the only one that differs. So there you go. Very similar, but in terms of result, but it differs in terms of pattern. So the markets had a bit of a retracement today. We had a bit of a pullback, but it had a really good day yesterday. And do you know what? It's not a big deal because the gains it made yesterday, it still held most of them. It's retraced about 40% from yesterday. So it's still a good day in the wider market sense. So I'm still kind of bullish that we're coming to the end of the bear market that we've been in since January. And hopefully, as we continue through June, we'll continue to have the volatility. And that's the big difference that I've seen this last week or 2 weeks, is the volatility's back in the market. We're getting moves. Yeah, granted, we're not seeing a lot pre-market. We're seeing less gappers, and the gap and go strategy as a go-to strategy is probably not as reliant, which is great for hot markets, but the momentum strategy is still working. The reversal strategy is working. So a lot of the strategies that I'm teaching on the course are still very viable, and well, I'm making money, so clearly they're viable and they're working. So let's just hope that, you know, we continue to maintain that volatility, and if we can maintain that volatility, we're going to find stocks that are moving, and we're going to get, you know, the range to take advantage of that. So that's all we need. We just need, you know, stocks that are moving in a trend with a good range that we can take advantage of, that got volume, that makes it reliable, and we can all, you know, be very happy and trade the strategies and make money. That's all we want. It's not a lot. It's not a lot. We just want to make money, guys. I'll tell you what, I've been poor, I grew up poor, and I've been rich. Well, depending on your definition of rich. Rich wins every day. There's no doubt in my mind. Anybody that says, and this is not my saying, this is someone else's, but I agree with it wholeheartedly, anybody says that money can't buy you happiness is shopping in the wrong places. That's all I'm saying. Enjoy your weekend, Alistair. It's a bank holiday here, but I will be back at it on Monday. I'll be putting a few videos out on YouTube over the weekend, so watch out for those. If you're not subscribed to the YouTube channel already, nip across there and subscribe already. You'll get notifications when I put the videos out this weekend. I've got a couple of videos coming, and they'll be posted tomorrow and Sunday. So in the meantime, I'm gonna end this stream. We've got 45 seconds left of the market. It's not going to go anywhere now. I'm not trading. I don't think you guys are trading right now, and if you are, you know, good luck. But I think you'd be a bit silly to trade into the after hours of the for the weekend. But in the meantime, I've had a good session. I've had a good day. I've had a good week, and I hope you guys have had the same. So in the meantime, enjoy your weekend, and I'll see you on Monday. Thanks a lot for joining me. I almost didn't